Hey, what's going on, friends and DGens? Thanks for coming back for another slightly behind schedule episode this evening. Appreciate all the viewers and followers checking in. I think the award this evening goes to my man, Brown, first on deck. Appreciate it, brother. Uh, I'll try to give some good intel here and help you get out from underneath that bridge. Maybe get away from camping in those tents and the like around those 304s, around the 304 highway. And always appreciate seeing my brother Boogie in chat. What's going on, man? Agent J, much love. Always appreciate the support from the DGen Roundtable team. All right. So, got a few things cooking up this evening with respect to some few things I want to cover. At this point in time, a number of folks are familiar that I have a background in diagnostics and information systems. I also have more than a passing interest in artificial intelligence, as well as cryptocurrency and blockchain stuff. So, last week, the ARK Invest Big Ideas report came out for the 2024 edition. It's one of my favorite must read reports I get every single year. So, we're going to take a look at that. We've also got a few other things I was chatting about with Boogie earlier in the week, a few indicators for some of you TA ninjas that might be of interest that I stumbled across. Now, I am going to confess to being slightly lazy on some of my TA in the sense that I really just do support resistance. And if you've tuned into some of the prior streams, one of the things I'll generally do is just set up different alerts at price points, either up or down. So it just simplifies my life so I get some additional time back. Anyway, let's get down to it. Let's get into some of the information, some of the content here on this front. So let me share my screen out and we'll get rocking here. So first up, for your viewing pleasure, when I am hailing different things in the daytime, I'm always hopping on Twitter and checking out what's going on in the Twitter space and seeing what crypto Twitter's got for us. So I came across this one post thanks to the algorithm, uh, regards to some different dominance indicators. And it's not one I've ever looked at before. So in this particular case, this individual Zero was referring to USDTD, which should be USDT or Tether dominance. So as that dominance drops, BTC rises, which kind of makes sense to me given that it's likely classified as an altcoin on certain indicators. So I bet it rolls up into some of the altcoin stats. And in turn, as it pumps, the BTC chart should dump as well. So these calling out some different indicators here at the 6.5% zone and then approaching a key level at the 4.8, roughly 5% metric. Big watershed moment, and discusses some different rejections here and the like. So let me open up on that. So again, for you chart ninjas, this one could be a real interesting indicator that you can add to your repertoire. Realistically, I'm going to bookmark it and come back into TradingView and some other stuff later this evening and check it out further. But as it just came across my desk, I figure I'd share a little bit of intel, as people are always looking for a bit of an edge or other mechanisms to confirm some of the different things they are seeing. So this past weekend, I had a really delightful extended late night chat with Boogie on some different potential movements. And he and I are going back and forth, just talking about some price targets and stuff. So stay tuned for some future streams with Boogie and I. We're going to be revealing some of our price targets and talking about how we got from point A to point B. We're just looking at some different charts and coming up with some mathematications and the like, and just trying to see what potentially checks out. So I know we're all big on the Richard Hart ecosystem, and DCC has long preached having the Thanos gauntlet of the Richard Hart ecosystem set up, ready to go with all the different tokens here. So again, as I'm skimming through Twitter, trying to keep myself busy during the day as I'm hustling for a living, but this is infinitely more interesting. This one pops up on my feed from hexicanhill.pulse, and he's also given a shout out here to Sir Jolly. So I was like, all right, let me go check out Sir Jolly and some of his content. We'll come back to that. I know Axis was talking about some fractal stuff on a recent DGen Roundtable stream. So in this particular case, I don't necessarily look at, let's say, extended patterns and fractals and the like, although it is intriguing to me. I just haven't really spent time in that particular facet. But in this case, Jolly's saying that PulseX is looking pretty similar to the Ethereum 2020 chart. So if PulseX follows the same path, that's around a 620x. Wow. That's cool. 620x off the bottom. I'll say that, beats my targets for some of the things I was looking at. Granted, I didn't necessarily get into the whole timeline and time frame, but I think we can unanimously agree, generally speaking, most of us who have been here for a minute or two, we're in prime position for the ultimate numbers go up type of solution. So, all right, let's just for a minute, just hypothetically speaking, let's just say 620x is insano territory. Let's cut that in half. Let's say we're talking 310 on just cutting it in half by 50%. So for those of us who've been playing around in the space, we'll have different allocations. I know some people are, let's say, less or more risk tolerant, depending on the condition. For argument's sake, let's say you put 10% of your portfolio in PulseX. Well, assuming this guy is even halfway right, that's a 310x on 10%. So the math works out. You basically just 31x your entire portfolio. Anyway, relative to PulseX and some of the other Richard Heart ecosystem tokens, one of the conversations I was having with some other colleagues and friends was what's going to run hotter when, or what's going to run hottest when. Love to hear people's thoughts on that. You can leave a comment below. Feel free if you're tuning in live to drop something in the chat. Personally, I'm thinking the Pulse chain side of things, the Pulse token runs first, and then we'll see different rotations, similar to what we see for Bitcoin, Ethereum. You go from large caps, mid caps, small caps, ultra speculative stuff. So too do I think we follow something similar. One of the benefits, though, I think in the Richard Heart ecosystem will be the amount of liquidity pairing, liquidity bonding throughout the system, which I would like to believe will help multiple things rise up relatively simultaneously. I am definitely keeping my eyes peeled for some of those different movements. That is getting really interesting over there. All right. On to the main topic of the evening, the Big Ideas report from ARK Invest. If you're not familiar with ARK Invest, they are headed up by Kathy Wood and her crew. They are definitely futuristic in their outlook and looking at some of the more speculative and developing sectors and industries. They put out this great report every year. It's the ARK Invest Big Ideas report. And in this case, the 2024 edition's here. I'll throw the link in chat and I'll tag it in the show notes after I wrap up on this one. So you can sign up for it yourself. Set a reminder for it in this particular case. And on the front page, it'll have some highlights. You give me a second here. I'll just actually get into the main report. So the report itself covers a boatload of things like robotics, energy, battery storage. It does get into the reason most of us know each other here, if you're tuning in, is cryptocurrency, blockchain, smart contract, digital wallet type stuff. One of the really cool things that I really like about the Big Ideas report, though, is that it does get into a fair amount of overlap between the two. So let me fire up and pull up my window with a report. And as a heads up, tonight's episode is inspired by, but not endorsed by, Coke Zero. Embrace the Coke Zero Master Race. Hopefully they'll give me a sponsorship. So, all right, let me just get over to the report here, cue this up, and away we go. And let me just flip my screens real quick. All right. So Big Ideas annual research report for 2024. Again, there is a bunch of interesting aspects of what they're calling disruptive innovation throughout this report. And they're highlighting things like politics, legal change, new stuff coming out, exposures. And what we're really looking at is different intersect points. And so I'll save you a lot of the extended reading on this. I may end up doing a part 2 to this where I'll focus more on some of the non-crypto stuff I find really interesting. But one of the things they really call out here is convergence, which is areas where some of these different sectors and industries are going to overlap and intersect. And so if you think like of a Venn diagram, then you can think about, okay, if you got 2, 3, 4, 5 zones overlapping, could be something in there that's really hot fire. So here they're talking about artificial intelligence, public blockchains, multiomics sequencing. They get into genetics and precision medicine elsewhere in the report and the like. But real economic growth can potentially accelerate from 3% on average to more than 7% over the next 7 years. That's more than double in terms of global economic growth on that front, which would be pretty wild. And you think about the fact that it's been 3% on average. Again, that's a really long run time. So we know we had certain sectors or certain periods of time in the last 125 years where it's going to be running hotter than that. But 7% on average globally on the next 7 years, which would line up to about 2031, 2030. Which for folks who have been tuning into some of the other community streams and the like, there's a lot of chatting about this bull cycle, crash, next bull cycle. Quick detour. I encourage people to look into MIT. They had a couple of reports spread roughly 40 years apart where they had two different think tanks look at some data. They both came to a conclusion that on current trend, it would lead to global economic crash around 2030. I think the last report was published in the 2010s. Don't hold me to it. I haven't looked at it in a while. But long story short is they looked at this twice and they came to the same conclusion. So the question is, have conditions changed on that front? So obviously, one of the big things, big speaking points right now is artificial intelligence. Sam Altman, CEO of the Chat GPT company there, he was asking for something like $7 trillion of investment for effectively like AI GPU type chips. So real interesting to see how that sector's been developing. Anyway, coming back around to some of the crypto stuff. So potentially all this innovation collectively could lead to an annualized equity return exceeding 40% over the next 7 years. If you look at these disruptive sectors, they're saying basically boosting market cap of these sectors from 19 trillion to 220 trillion by 2030. I want you to keep that 220-ish trillion number in your brain for a little bit here. So they get into, again, here's this sort of overlap of different converging platforms. They get into some GDP elements. All right, here's kind of a cool one here. Let me make this a little larger for some of the viewers at home. So you can see they have this really cool convergence matrix chart here. So cryptocurrency, smart contracts, digital wallets, same thing. Cryptocurrency, smart contracts, digital wallets. And you can see they have these different intersects. And just due to the way it lays out, basically the bolder or stronger the color is, the more they're arguing for an intersection on that. So if I look at cryptocurrency, intersecting with cryptocurrency, it's blacked out because it's one and the same. And then you get into different shades along the way. So they're saying, okay, smart contracts, digital wallets, obviously there's a lot of overlap on that front. As you move along into things like cloud computing, autonomous mobility, advanced battery tech, renewable rockets, they're saying they believe that there are different additional use cases on that front. And what I found really interesting was they didn't get much into precision therapies, programmable biology, multiomic technology, and like, and I'm going to talk more about that in my next stream. So I'll save you guys some of the boredom on that one. So as far as cryptocurrency, smart contracts, digital wallets, next gen, so they got items here on like next gen cloud and intelligent devices. What the hell is that Apple Pro goggles thing? I'm drawing a blank on it here for a second. Somebody in chat remembers what the hell that damn thing is called. Give me an assist on this one. Vision Pro. That's the damn thing is. So as far as Vision Pro and the like, well, okay, maybe simplistically they're going to use to simulate some screens and the like, but as you think about things like augmented reality and how that might overlay with things like digital wallets and smart contracts, what if you had something like on-chain data for an NFT? And so you can slap that into your augmented reality type game. You know, what was the Pokemon game everyone was playing on their mobile devices a few years back. So let's say you did something like that, and you're walking down the street looking goofy as hell with your Apple Vision Pro goggles. Sorry, Apple. And you've got your NFT linked on chain. And maybe that gives you special permission to participate in an augmented reality game or find the local speakeasy or any number of different things on that front where it can take you and give you special access to this alternate world. Okay, blending, but real world versus Ready Player One type stuff. So there are some interesting use cases, I think, with emerging technology on that front. And let's say what I'll call digital wallets and smart contracts, less so cryptocurrency. Of course, distributed ledger technology kind of ties all those things together. Anyway, that's my quick detour on that one. And I'll be speaking more on that one in the next stream for some of the non-crypto stuff. All right, let's jump down to page 34, which is where the real cool stuff kicks in for us. And it's like super dry here up here where I live. And so, man, I got to get a humidifier. Anyway, so Bitcoin allocation. And I covered a little tiny touch point on this on Boogie's stream the other night. So the report gets into different things like different ratios, analysis, optimal investment scenarios to save you a bunch of this stuff. I went through and I highlighted a few things that would be particularly interesting. And ARK Invest, they filed for an ETF as far as, let me just take a quick. Now, I know they've got about $6.7 billion of assets under management for ARK Invest. So in this particular case, people might want to debate, let's say, the overall accuracy of Kathy Wood's team's overall picks. I generally agree with her outlook on these emerging sectors, though. And so if you want to call that, inherent bias, that's fine. Certainly, I think she's proven herself and her team has proven itself to be very forward looking. And if they might not hit the bullseye, but they're at least ending up on the board. Anyway, one of the things they call out here is they make these really great comparisons across from Bitcoin versus other equities and asset classes and bonds and the like. And so I just highlighted here basis of value, decentralized independent monetary system powered by open source software on this. This is the basis of value. And we often talk about, hey, what's it going to take or when does Bitcoin flip the uh, gold total market cap on this one, which I think is about 10 trillion on that one. Anyway, use cases, scarce digital store value, the native currency to the internet. And over here for commodities, including gold, you've got wealth preservation. So there's a lot of overlap, and certainly we're primed for the taking over the next 7 or so years. Now, one of the things I often think about myself is, okay, we talk about Bitcoin, and I know Richard Hart has mentioned there's stuff better than Bitcoin out there, and it's, a constantly evolving space. Realistically, you think about like the turnover in stocks in the top 10 over the last, 10 years, 15 years, 30 years. And I'm not bashing Hex or the like, I'm just asking a legitimate question in my mind. Is Hex still viable in 15 years? Hell, a year is a lifetime in crypto. So it'll be real interesting to see how well that holds up over time. Anyways, coming back around to Bitcoin, just arguing for some of the blue chip aspects of Bitcoin as boomer monies will be trickling in and major institutional adoption and so on and so forth. Bitcoin has outperformed every major asset class over longer time horizons. Since over the last 7 years, it's annualized an average 44%. So that's an average over a 7-year span, meaning in this case, you've got 1 year where it's 70%, and you have other years where it's barely scraping by 10, 15%. So on average, on a 7-year basis, you're up about 44%, or like assuming you're constantly reinvesting, taking gains, and the like. And potentially you can beat that if you're really good. But on a 7-year basis, it's about 44% on that front. To no one's surprise, we've often talked about, hey, you need to have a 4-year time horizon when you're getting into the crypto space. You got to, I know Charlie and DCC have preached through their courses. You got to be willing to buy and hold for potentially 4 years or longer. You got to have a certain level of conviction. Don't be afraid to cut things that are largely going to be losers. But if you're sticking to the good stuff, 4-year time horizon. So as confirmed over here by this company, again, with roughly $6.7 to $7 billion worth of assets under management, the question isn't when, the question is how long should you be holding? What's the old saying? Time in the market beats timing the market. If you bought and held Bitcoin for at least 5 years, no matter when you made your purchase, you had the opportunity to turn profits, right? Pretty cool. I know I myself, I bought a little bit of Ethereum in 2017, wish I bought a whole lot more, and then rode that up, rode that down, and then started going real heavy in the paint in 2021. So here was one that I was really surprised to read, and this is on page 39 of the report. It's that the correlation to traditional assets is low. It hasn't correlated highly to those of other asset classes. I know we talked about a 4-year cycle, and is it really the halving which drives certain behaviors? And the other related question is it the liquidity cycle? I need to do a little more reading on that front, but I certainly have seen that as somewhat of a, I don't even want to call it a counterpoint. Let's call it a correlating factor, because realistically, I'm willing to bet there's some element of synergistic effects on that front. Anyway, based on ARC's data, they've indicated here that Bitcoin has a decreasing correlation to a number of different asset classes. In this particular case, the correlation of returns relative to traditional asset classes has been 0.27%. So in general, it's not highly correlated to anything. Now you can see real estate, equities, and emerging markets have stronger correlations than things like gold and commodities. Again, makes me think that there's a relationship there, not just happening Bitcoin itself, but also liquidity cycles. All right, here's where we get into some fun sauce over here. Bitcoin can play an important role in maximizing risk adjusted returns. And so they've got these different simulated optimal portfolio allocations by year. And if you notice down here in the bottom left, I highlight, oh, well, let me see if I take myself off camera for a second. You can see in the bottom left, they've got 19.4% for 2023. And so as they outline this portfolio, they're saying, hey, uh, 19.4% is going to be the optimal allocation you could potentially have for maximizing your risk adjusted returns. So I would like to believe anyone like these different financial advisors and investors, if they're worth a grain of salt, they're going to be having some of these conversations with their clientele. Now, the hard part is going to be number go up, number go down, especially if you haven't been in the game for a minute and you're not following certain cycles. But 19.4% is the basic premise put forward here by the ARC team. So, on a rolling 5-year basis, you would have maximized your risk adjusted returns during the past 9 years. And then on average, your optimal allocation would have been 4.8% over the last year, 19.4% for allocation. What would be the impact of an optimal allocation into Bitcoin? They're saying allocations from the 250 trillion global investable asset base into Bitcoin would have a significant impact on price. That means your total investable asset base today is estimated to be 250 trillion. If they put in, or let's say everyone put in 19.4% into Bitcoin, then potentially Bitcoin goes to $2.3 million. Now, notice they don't really say when, they're just saying, hey, as of today, assuming 19.4%, if you were to put that on into Bitcoin, then the math on that breaks down to roughly 2.3 trillion. And so let me show you how that works out here. Let me bring up my calculator of hopium or copium, depending on the day. Let me just quickly bring this up. All right. So in this particular case, we're talking about what they said was 250 trillion, right? And so I always get messed up with all these commas when we start talking numbers this big. 250 mil, 250 bill, 250 trillion. Holy shit, that's a lot of zeros and a lot of commas. All right. So now they're now saying, well, optimal allocation would be 19.4%. So we'll go with 0.194, which brings us to $48.5 trillion, right? And it is estimated slash projected it'll only ever be 21 million BTC. And that's without factoring in shit like people losing their keys, people winding up dead, fumbling the bag in assorted capacities. Meaning there's that 2.3 million number on that. So in an incredibly bullish case, assuming people follow that allocation, I do want to stress incredibly bullish. They're coming up with that's the math behind their $2.3 million per BTC. All of a sudden, getting in at what's the current price at this instant. Let me quickly check something on that. Current BTC element is. Let's see what we got. BTC. 52 grand, 52 grand to 2.3 mil. Hey, that's some hot fire. And let's see what we got going on here. I know PLSX, right? Wild, awesome, wild. One can hope. But at like 52 grand and some change, all of a sudden BTC at 52 grand doesn't look that bad. All right. Let's see what else we got going on. So let me segue back over to that ARC report. So even if you did at 4.8%, they break down some more modest allocations, right? Let's all right, we've sold the vision. Let's get down to some more modest allocations on this stuff. Then we're talking potentially 120, which is kind of what I'm thinking we personally end up in this bull cycle, up through 550. I heard some other analyst, I have to go dig up his name, I'll post it up to Twitter, was calling, was it Demeter? Apologies if I'm probably butchering that dude's name, was saying like 500 to 600K BTC. So let's go with a range of 100 grand up through 550 on this run, right? Fingers crossed. Miracles can happen. That's why we're all here. Miracles can fucking happen. All right. So a few other things that I'll call out in this report, and then we can get off and on our merry. In this particular case, you can see just some of the moves here that are nicely charted out for us, right? I mean, for those of us, I know BLX, Boogie, you're all here through all this. Brown was here through all this, watching Genesis, FTX, Silicon Valley Bank, Three Arrows, Celsius. I mean, it was just hit after hit after hit for a lot of the bear market. And then we started to grind our way back up. If you purchased BTC, right? Let's say you did a market YOLO launch in January 2023, you're up 3 times on your money in the most conservative digital asset that most of us are going to interact with. And then from there, if you played the game right, you'll be up more than that. So even if you are ultra conservative, you had the opportunity to 3x your money in a 1 year span in this asset class. And we're still going up. Few other ones. This was a cool one I haven't seen as far as an on-chain metric. It turns out it's a proprietary ARK metric on this one. And they've indicated that the on-chain market mean has been crossed for the first time in 4 years. I know a lot of us might look at Glassnode and the like for some additionals. So I'm going to have to cross compare this just to see how it ultimately lines up. But when we cross above the market mean, it typically indicates the early stages of a bull market. Well, we talk about being on a 4 year cycle. There's a lot of points of confluence around here. Anyway, as far as a few other things, they get into different moves in the crypto space here on that chart. I'm just going to gloss over that one. Again, link will be on show notes and the like, so people can read the ARK Invest report. What I thought was really interesting that I didn't necessarily track and didn't necessarily process, let's say unconsciously or subconsciously on this stuff, was that it was a safe haven during the regional banking collapse. So I think we all remember Silicon Valley was all over the news. And then it was Signature, Silvergate, and a bunch of other ones. I know, what was it? One of the major New York banks had like a 30% drop on their chart a week or two ago. I was like, oh shit, what's going on? Given that, potentially there's unlimited quantitative easing, nothing great. And quick side note too, is I think I read like currently we're tracking towards 44% of collected tax revenues will need to be allocated to the debt over the next couple of years. So we're all looking for some element of safe haven and escape. There's other aspects in this report too, talking about ordinals, which I really don't touch and don't play in. Again, if you are in that space or really operating in that sector of the blockchain and cryptocurrency stuff, there may be some things that are of interest to you. And where I'll close out tonight's quick summary on the ARK Big Ideas report is the overall look between 2022 and 2023. And in every conceivable metric, numbers have gone up, right? Hash rates, market cost basis, long-term holder supply, transaction counts, literally every metric, everything is moving. Numbers are going up, more money's coming in, cost basis is increasing, more of the supply is moving around. Some portion of that may be institutional investment. One of the things I've been kind of wondering in the back of my head is this ETFs came in and okay, we're running hotter now, but it wasn't this mega spike like a lot of people were calling for. And I suspect a lot of that has to do with people, one, adoption, right? Who was it? Was it Vanguard that said we're not even going to bother with Bitcoin, taking that giant fat L on that one. And I suspect part of it would be people moving from like one Bitcoin investment type, aka Grayscale, to other ones, be it ETF or actually holding the asset itself. Anyway, that's where I'm going to hit the pause button on tonight's review of the ARK Invest report. Next go around, I'm going to get more into the medicine side of things, some of the IT, AI, and robotics side of things, as those are other interests of mine. Certainly, we'll take a look at the crypto space as well. And that's it for this evening. So I appreciate everyone tuning in. You guys have been great. Keep your eyes peeled. For those of you who are interested in like medicine and AI type stuff, I'll be talking about that a little more on the next one. So hope you all are enjoying the pumps. I'm enjoying these green candles, and we'll see y'all soon.